to see you again.
Good
So
to see
we're gonna,
you.
yeah, we're gonna get started with the interview today. So I've interviewed some other folks on your team, and since I have the pleasure of chatting with you today, I want to get top down. Like you have a wide background, you've seen a lot in the B2B world, and I want to jump off with talking a little bit about what are some innovations that are happening in the fintech sector. Maybe you can start off with just a little bit of your background and what sparked this big idea as far as the buy now, pay later platform that you offer today.
Thank you for the question, Christina. So really, it dates back to a couple of decades as I've been working with technology and software companies, and the transition happened from a perpetual licensing, which essentially is pay upfront, versus to a SaaS-based pricing, which is on a monthly or quarterly or annual basis. It was a big movement. And now, two decades later, lo and behold, most companies are on a subscription model. But if you think about what happens for the SaaS company or the technology company offering that, they're now in a working capital problem, meaning they're a bank. They have to hold the cash for the customer, which is due to them from 1 year to 3 years. And when I was at SAP and we went through the transition, and SAP is a big public company. This was a challenge. Now, this is a challenge for small companies, but they have no option. That's the reason we came up with Ratio, is to solve that problem for them, is to give them the ability, one, to access cash, which was locked in for their customers, the most valuable resource, versus having to go raise money in public markets or private markets. Number two, giving the ability to these companies who are selling to small, medium-sized businesses, large companies selling to small, medium-sized businesses, or even larger businesses. One, to underwrite the risk so they know who to give a monthly payment plan and not have to write them off.
It sounds like a lot is changing in the space as far as how people work with money.
Yeah.
Is there any particular challenges that you saw illuminated with this? Like you had the personal experience at SAP, but some other folks, how would this transition wide scale across the B2B sector?
Yeah, it's an excellent question. So just finishing my thought on larger companies or smaller companies, at the end of the day, salespeople are making the determination at a sales cycle to whether to give a discount or to even, in many cases, even to pursue that customer. And if you're a salesperson, you want every customer.
Yep.
So therefore, the risk assessment, unless it's productized, sort of goes out of the window. And
Okay.
that's how B2B sales and B2B software has evolved, because today or in the past, there was very little focus on profitable growth. It was growth at all costs. That landscape has clearly changed. That's where fintechs come in, to give you the ability to underwrite these deals and grow profitably, which is getting the cash up front and not having to discount significantly without any science. So if you think about an average salesperson, their charter is simply to close deals and meet quota. And today's systems, like a CPQ system, is simply designed to help you get discount approval.